Maybe the one I take 753.
Hi. Who is C8 Chris P? Oh,
I sent it to
PJ Christopher.
oh, I'm gonna mute you, PJ. Go ahead, Eric, if you want to get the meeting started.
Yes, I'd like to call to order the format meeting for MCDD, Pen 1, Pen 2, and SDIC. We'll also have the Joint Contracting Administration. So within that, let's begin with Pen 1. If we could do the roll call, please.
Sure. Calling Pen 1 to order. Calling the roll. PJ Christopher. Present. Jeff Noodleman.
Here.
Tom Collette.
Present.
And I notice we don't have Annalisa Pillar, and I understand that Betsy is stepping in, but do we need to, is she going to be elected or is she
So
representing?
Betsy is now a voting member of Pen 1. It was just a change of representation from Metro. So she signed her oath and ready to go. So
Wonderful. Then Betsy Emery
Present.
and Claudia Campuzano present. So we've got it.
Excellent. All right, and let's move on to Pen 2. And if you would call the roll call, please.
and Karen Myers. I'm going to ask you to unmute and see if that helps you.
Karen Myers, present.
Thank you, Karen. Mary Helen Kincaid,
I'm here.
Shayla Garcia,
Here.
Dave Anderson indicated he may be delayed due to power outage, and Eric Molander.
Present. Excellent.
4 members of the board are present.
So we have quorum and we are ready to go. So MCDD, you're up next.
All right, calling MCD to order. Wendy, can you do this a roll call vote?
Yeah.
For
So-
another vote.
So we're not expecting you to have quorum. Corky Collier indicated he will join around 1:30. Kenzie Berry indicated she's not able to make it. Darian Santner.
Present.
Nikki Schultz indicated she's not able to attend. Ken Anderton.
And Ken Anderton's present.
So currently 2 members of MCDD. We're expecting the third in a few minutes.
So we'll call to order after Corky gets there. Thank you, Eric.
All right, and SDIC, you're up next.
All right. Thank you, Eric. Wendy, would you call the roll, please, for SDIC?
Yes, Taylor Steenbach. Do not see Taylor on yet. For a buzz. Chris Damgan.
Present.
Tanny Stephenson.
Present.
Betsy Emery.
Present.
So there's
Welcome,
currently
Betsy.
3 members present. And then Tanny, if you could call the JCA as well.
Thank you. I'd like to call the Columbia Corridor Association Joint Contracting Authority Board to order. And Claudio Campuzano,
Present.
Karen Myers,
Present.
and Corky Collier will be joining us later, and Amy Chumowitz.
Present.
All right, and Tanny Stephenson present. We are in quorum. Thank you.
I'm sorry, before we move on, I just want to say, Tanny, it's very difficult to hear you. Your voice is very faint, and I want to be sure I capture everything that you're saying. Thank you.
Okay, with that in mind, the first order of business is to receive our auditor's reports. So we're going to turn it over to our independent auditor, James Marta. And as we get started getting your presentation up and operating, Just by way of background, there are three levels of audit that can be performed. One is a simple compilation. The second is a financial statement review. And the third is a full-blown audit, which tests the financial statements, tests the financial records, the analytical procedures, analysis of journal entries and adjusting journal entries. And James, which of those three levels were applied in the case of the drainage districts?
The third level, the highest level, which is a financial audit.
Excellent. Okay, so that sort of sets the basis for our ongoing discussions. James, you have the platform.
Okay. For some reason, get this up here. Well, so a financial audit is a lot of times people look at the whole document and they say this whole thing's an audit. But the first thing I want to do is cover things that management, those charged with governance, needs to know. First of all, we are reporting to the group of 5 entities here: the Multnomah Draining District, Penn 1 and Penn 2, Sandy Drainage, and the Columbia Corridor. We're going to report to you about communications those charged with governance. So it's not just, okay, here's the audit. There's things that we are required to make sure that we report to you, because you're the ones who are really the ones that we need to be responsive to. So our responsibility is on the financial statement is the financial statements are the responsibility of management. And so they do the accounting, they give us the information. We might help assemble the report that you see in your packets, but they're responsible for those numbers. Our responsibility is to express an opinion on those, and that opinion is unmodified. So the auditors don't say, hey, good job. They pretty much say the financial statements fairly present. And fairness means, there's not a complete exactness. We don't check every single transaction. We have to see if management has consulted with other independent accountants, so they didn't go ahead and get a couple audits and pick the best one. We did not have any disagreements, and they gave us representations at the end of the audit. We have to report to you whether there were any accounting policy changes, and an accounting policy change can actually change how they record numbers. And so when you've heard of different accounting debacles in the past, it could be like the WorldCom one a number of years ago is where a cable company was actually invested in marketing in the Midwest, but they said, hey, that's going to be an asset. So they showed all their expenses as an asset, which would be pretty good, right? But that would be a difference in accounting. It turned out it was not an allowable accounting principle, and that was a problem. Well, we'd have to report to you, and management should also if they change how they account for things, and they did not. That might happen if there's new accounting standards that come out. And so it's not that it's wrong, we just have to report to you. We also have to report to you what are the significant accounting estimates. And so when you look at your financials, mostly you have capital expenditures and projects. A lot of those things are capitalized, meaning you might spend money, but you show it as an asset over the long term because it has a benefit over a longer period. So for instance, if you go ahead and pay the auditor, that's just benefits one period. There's no future value. But if you go ahead and reinforce or build a new levee, then that could have a value over 30, 40, 50 years. And so that's how there might be changes in the accounting or different treatment. The biggest estimates on the financials is really just sitting with MCDD and where they carry the pension liabilities and the OPEB. The pension liabilities and the other post-employment employee benefits are estimated through use of actuarial processes. We go ahead and review the actuaries, we review their expertise, we review the calculations, review all the inputs that come from the client and your plan, and determine whether those are fairly stated. The assumptions in those are certain earning rates and lives of participants and such. And so those are your biggest estimates that are on your financials. Further, an audit is more than just assuring the financials, so we don't just match it to the invoices and do that. although we do that for the big expenditures, we do a lot of detailed work. We have to gain an understanding of the underlying accounting that is done, what is done to work it up, the approval processes, when they go to you for approval, when they have to have, you know, meet certain state requirements. We test controls. We gather other evidence and details. We do other analysis and test calculations. And we review contracts and they review the accounting methods and reporting. So we review the system that builds up these numbers also. The plan scope was completed as original timeline. We had a little bit later on some of it, but we got everything done by the due dates. No findings and no significant adjustments. So that's really a good audit. The first thing I think as a board you should look is what is the opinion? It's unmodified, and also were there any findings, and there weren't any. So those are both good marks. So we are giving an unmodified opinion on your districts. And I'm gonna go ahead and touch on some key components. So we're gonna touch on, when you look at the financial statements, all of them except Sandy, the Sandy district, that's a nonprofit. The other ones have a management and discussion and analysis that's written by your management team, and that helps. That's a good starter for reading your financials. It should tell you what happened during the year. You can see some changes and get a better picture of what happened. And also they might describe other facts and conditions that happened during the year. So the notes behind the audit are very structured to support the figures, but the management discussion analysis is a great place to kind of get an understanding of what happened financially. So we have a report on internal control. So I kind of put a review of fiscal affairs required by the state of Oregon. So we give also a separate report on that. So those are just letters, and they report basically. These letters here say that there was no material weaknesses or significant deficiencies. So that's the best letter here. And then the review of fiscal affairs, there's certain elements that the state wants us to look at. You know, do you have insurance? What are you doing? Do you have any tax revenues, or how do you charge your members, and other certain areas? And you have met all those requirements there. So that's the other compliance reports associated with these audits. Then now I'm going to touch on the financial results. So MCDD has operating income of $1.2 million, that an increase in net position of $1 million. Since it's really a capital-based, you're not going to have consistency. Some years you have more projects and spending more money than you're bringing in, and other years you have a little bit more income coming in, and that's what happened this year. You do have a net pension liability. It's $4.7 million. It went up from the prior year, and partly of it going up, and we do a lot of government, is that the assets the prior year went down. So when the actuary measured it, the liability goes up because there's less to offset. But your total net position is $10 million. That doesn't mean you have $10 million to spend. Net position includes all the capitalized equipment, the levies, and all that. And so that's the net of all of that. So if you take your assets and take out your liabilities, this is what's left over. But most of it is capital improvements. Pen 2, smaller, $264,000 of operating income, $50,000 of loss of change in net position. So the net position is just over $2 million, a little bit of increase over the prior year. Pen 2, $135,000. It's got a loss. So that's okay. You just watch that from year to year, but sometimes you have projects that are you get more money in one year and you spend more in another. So that's normal for this type of entity. But you see you have net assets of $6.7 million, a lot of it in capital. I have some charts later on to show that. Sandy, $496,000 in operating net income, increase in net position of $263,000. Your net assets $4 million this year, prior year 3.8. So that was the whole increase, was just that change. You have $2 million of this $4 million is invested in capital assets. and the joint contracting agency, 261,000. It has actually a decrease in that position, and that was mostly because you did projects and you transferred those out to the other entities. So net position of 171. So mostly administrative and pass through of projects. So they'll build projects, do projects, and then once they're done, they'll transfer them out to the other entities. So this is a graph of kind of your balance sheet. It shows your assets and your liabilities. Deferred inflows and outflows are related to the pension liabilities. So what you do want to see as an entity, you do want to see more assets and liabilities. Your net position has been pretty moderate, even though you had a growth period where you've actually got financing and you put projects into place. So that's really what's been happening over time. We went back to 2012 and charted this to see that development. You do have to have net position because you do need to have some funds, because sometimes you need to have more improvement projects or even repairs that might not match up to the revenue. So you need to have some capital to do that. Here's looking at the capital assets. So the height is the depreciable assets. So you saw the expense and the assets increasing. This is kind of drilling down into that element, and you can see the assets increasing. Accumulated depreciation is the accounting write down of those over time. So if you bought a building and it was a 30-year life, we divide it by 30 years and take 1/30 each year, and that's what's happening. What that does is it spreads the value of what you spent over different financial periods to show that the future periods are getting use of that value. Then going over to Pen 1, you see a similar comparison as to others, but you see the liabilities dropping off and the net position increasing. Each of these scales are different. So you do have a net position of over $2 million, but what these financial statements don't show is what your future needs are. And that's why you have your plans, you have your engineers doing that. And so probably Pen 1 is got projects in the future that at least you have the funding availability for that. So they'll be carrying that into the future. So they're in a good position and don't have very much in liabilities. So here are the capital assets. So the total capital assets have been growing kind of flattening over time. This is work in process. So you actually have a lot that's working in process. This capital assets includes that. Pen 2, very similar to Pen 1, very low debt, just kind of some operating payables and mostly net position and the assets. So very strong financial position, not debt ridden. And then here are the capital assets. So it does show that you were flat for a while, but you've had some big projects that you've been putting into play. This work in process is an element of the assets. Sandy. So Sandy, very similar to Pen 1 and 2, very low in debt and assets. So all three of these very strong financial positions. But there's purposes of having debt.
Alert from calendar. Okay.
So debt is important, but it's nice when you don't have it. It's important to get the projects done. And so these entities have been able to do that, but they're smaller and they're smaller projects. And then there's the capital assets. You can see they accumulate over time. So these are the capitalized project costs. And then this orange is really the work in process, meaning this is the component that's they're still developing, not really done. And then JCA. So you do see a little bit of volatility there. And this really is connected. So you saw when I talked about the JCA that they transferred assets out. So over $700,000. So that's really what's happening here. So you see this drop. So when they might do a project and then when they get that done, they transfer it out to one of the other districts. That's why this is dropping. So this is not a frightful financial picture. It is demonstrating how they are administering and working with the other entities to do that. But that's something to very much be aware of what's happening with the entity. So the JCA on its own doesn't have that much in assets. It's pretty much administrative entity and passes through costs. So that was kind of the financial overview. So what we talked about is how the audit was done. You have unqualified opinion, talked about the financial positions of all of them. One of the values of us doing all these together is that we can actually look at contracts on both sides and see that they're in agreement. So all of this strengthens the evidential matter that it's used that supports all of these entities. So by us auditing all those together, it creates a stronger process. So overall comments is no opinion modifications, no deficiencies. You met all the state requirements. We've overall seen some strengthening in that position, but as a capital focused entities, you're going to have to do that over time to meet your future demands for capital infrastructure. With that, are there any questions? This is a very detailed process that you have your staff, Janet, and her staff done a really nice job of bringing this all together, and we really appreciate them assisting in this process.
Okay, so let's go through each of the districts. Penn 1, do any of your members have questions or the like associated with financials?
I don't. And one board members, do you have any questions or comments?
No, thanks.
No comments, but a nice presentation and laid out very well. So good job on that.
Okay, MCDD.
Mr. Chair, we also need to have the boards accept their audit reports.
All right, so Penn 1, do you, let's have a roll call vote for acceptance of the audit report.
So can we get a motion from Penn 1?
I'll move for the acceptance of the audit report on behalf of Penn 1.
I'll second.
All right, we have a motion and a second. So on the roll, PJ Christopher,
Aye.
Jeff Newland,
Aye.
Tom Collette.
Aye.
Oh my goodness, I'm sorry, I'm forgetting the name of our new member again.
Betsy Emery.
All right.
Aye.
And Claudia Campuzano, aye. Motion is passed and the report accepted. Thank you.
Excellent. MCDD, you're up next.
All right. Anybody from MCD have any questions? Corky or Durian, I think the two who are on.
Not enough of it.
All right. I concur with PJ's comments. Very good presentation. Thank you very much.
Yeah.
And if I could get a motion to accept the findings of the audit.
I got it, Ken, Darian. I move to accept the financial year 22-23 audited financial statements for the district as presented.
All right, second. Corky seconds it. Let's do a roll call vote. Darian Santer.
Aye.
Corky Collier.
Aye.
And Ken Anderton says aye. Motion passes unanimously.
Okay, so next up is going to be SDIC.
SDIC board members, any questions on the financial audit as presented? Hearing none, a motion to accept the audit. Anyone?
I move to accept the audit.
Okay.
I'll
Taylor-
second.
Great. Taylor Steenblock moves to accept the audit as presented, and Betsy Emery seconds that motion. And a roll call vote will be Taylor Steenblock.
Aye.
Okay. Chris Damgan. There he is.
Chris had to step out. I'll go grab him real quick. Be right back.
Okay. Betsy Emery.
Aye.
Nothing like going right into the fire, isn't there? You know, just. And Tanny Stephenson votes aye, and that passes. Thank you, Eric.
Okay. So next up is going to be Pen 2. And we've had a number of really pretty unusual accounting treatments and changes. So we're going to open it up to questions from Pen 2. Okay, so let's begin with adjusting journal entry 2. And in this adjusting journal entry, which we'll see more of with the urban district, it's when we capitalize operating activities that really are in support of capital expenditure. So within that, we have $186,000 worth of general consulting, and then a series of administrative charges, and then licensing, permits, and fees. This is all just part of one of the differences between the government accounting and the GAAP accounting that we do. So we're going to capitalize elements of what we otherwise would consider operating expense. The next thing we'd like to do is turn to page 9 of our financial statements. And while the operating loss that we incurred for the current fiscal year ending June of 2023 was significantly less than we had budgeted, largely because of activity on 13th Avenue Pump Station, there was a really kind of peculiar element that was involved, which is you look at the non-operating revenues, we have a loss on disposal of assets of about $380,000. Clearly, you go back and the board never voted to sell an asset. But this has to deal with the way that we account for our drainage master plan. Now, with that in mind, James, do you want to remark on this element, or Jim Middle or Lori?
I think Lori probably at best. We did inquire, and that's sometimes there's assets on the books, and you guys are going back and cleaning up stuff, and they said, okay, this is no longer a capital assets being used, so they've adjusted that out. But I think Lori could give more insight.
Sure. There's a couple of things in there, Eric, that are in that write-off. One is for capitalized interest, and GASB 89 was actually in effect in the fiscal year ended 6/30/21, and we identified some capital interest that was still included in our work in progress balances in this year, so we wrote those off. And in addition, GASB 34 was issued, I don't know, I can't remember what year it was. It was prior to 2020. And that provided guidance on what was defined as a capital asset. And there were some planning efforts that had been capitalized as fixed assets that no longer met that criteria. So we wrote those off, the net value of those assets off as well this year. And we did the same sort of correcting action in all of the districts to make sure that our fixed assets are appropriately reflecting those items that should be capital at this point.
Right, and so what we have in that activity is that we had an intangible asset, which were the drainage master plans. And they were no longer considered to be an intangible assets and had to write those off. So that when people look at our financials and say, you know, what asset did you sell at a $380,000 loss? The answer is, well, it just reduces the amount of amortization, again, because it's an intangible asset, that we'd have to charge off against the income statement each and every year. So I wanted the board to be completely aware of that. The adjusting journal entry for $249,000 is shown on our cash flows. The contribution of cash assets, which is part of the supplementary information, that's actually transferring activity that was under the JCA to our capital assets. So,
Eric, can I ask a question? You had said
sure.
on page 9, and I'm having trouble finding page 9 in my board packet.
It's
Or,
page 28 of 64 for the Pen 2. It's page
Okay.
9 of the actual report document.
okay, thank you.
Okay. But I wanted to make certain that you were all aware of that. And then if we turn over to, let me get to the appropriate page. Yeah, it's page 42 of 84 is page 22 in the document that will be released to the public. This is our schedule of acreage assessment transactions. And as the Pen 2 board is well aware, there were some major problems with billing those assessments last year. And what we have is the current levy that was levied by Multnomah County, any adjustments that we have. The largest discount is going to be for those people that paid on time. There's, Lori, what percent discount do they get? 3%?
3% if they pay their tax bill by November 15th.
Excellent. And that just helps us out in terms of cash flow. But as the board remembers, from our November of 22 and April of 23 meetings, we did have to make some significant adjustments. We sent out adjustments for refunds for being overbilled of about $101,000. And then we received from MCDD a payment of about $24,000 for underbilling of our customers. And James Marta, typically those kinds of adjustments, a billing adjustment like that, are charged to a contra revenue account, but I don't see that in this instance.
Well, for the financial statements, everything is kind of grouped together, but yes, it really should be part of the revenue. It's not broken out. And it is kind of normal for any entity that does billing that there's adjustments. It's the best estimate of how bills are levied. And so those adjustments just flow through the next period. That's normal.
I'm sorry, I didn't quite understand that.
I had two parts to that answer. One is the assessment revenue, any credits should be in that same line item. So we don't have a line items displayed. Although the general ledger might have a lot more accounts than we show here, it's all generalized together. And then I related that that's normal. That's normal that there's adjustments to revenues from time to time. Even your county who charges taxes will adjust people's taxes and run it through there. But internally, they probably have a separate account, like the county does.
Okay, all right. So again, it was not our finest hour as far as our clients were concerned. It was a very significant billing error rate. We've taken steps to address that, and I feel confident that the MCDD finance staff will be able to get that right going into the future. Lori, James has just told us that most of the time that those adjustments would go through a contra revenue account. Is that the case in Pen 2?
That's not the case because of the nature of the transaction that was occurring. So the revenue actually all goes through the county. And this was a correcting adjustment and payments that we had to make from district funds. So we grossed that up and showed both transactions independently on the financial statements. So that reimbursement of overpayments was treated as an expenditure.
So in this instance, have we overstated our ability to receive revenue from assessments?
No. Because those dollars were coming in from the county, so we can't misstate what we received from the county.
Right, but it still is a contra revenue item. Because,
Not, if we ran the reimbursements through the county, yes, it would have been a contra revenue, but because the district itself had to pay those disbursements, it was recorded as an expenditure.
okay. Interesting answer. I appreciate that. Are there other questions that we have? Just in a typo issue, James, if in your final report to us, you have my home address wrong. So I'd like that to be corrected.
Hey, if you could have staff send that information to us and we could make that revision.
Perfect. Yeah. So
Unless-
it has me as living in Fairview. And I think that my Bridgeton neighbors would say, "What? Did you move?"
What is the correct?
I can send it to you.
Yeah,
James.
we'll share that, so it doesn't have to be on quite as public. a
Yeah,
record.
this is just an
Well,
administrative thing. It's no
It's
big
gonna
deal.
be public record.
Mr. Chair, I just wanted to let you know that Dave Anderson has joined us.
Excellent. Thank you so much. So this would be after the front piece for that. That's what
Page
we consider page I.
I, yes.
So with that, Dave, do you have any questions about the financials? Not hearing any. So I'm looking.
good. I'm good. I'm good
You're
with what
good?
you got.
Excellent. Thank
Yep.
you, Dave.
Yeah.
Corky, you have your hand up?
I don't mean to jump ahead, but we have to, I think JCA needs to vote for this as well.
Excellent. And we will do that. Mary Helen, you have your hand up?
I do because admittedly, a lot of this went over my head. So, and I know that you have expertise far beyond anything I could ever dream of in my lifetime. And if there's things that you think that we should be concerned about and not accept the audit report, I'm willing to live with that. I guess I just wanted to admit to the fact that your expertise is guiding my ability to accept or not accept. And, you know, there are some things that not everybody's got the accounting skills that you have. And I appreciate you bringing that up, but you could have been speaking Greek and I probably would have understood just about as much.
I apologize for that because I'm really
No, I mean,
trying to make sure that
there's a lot of wording. I mean, I did go through and read it and the numbers didn't really make a lot of sense, but I figured Eric will know. So I appreciate that. I appreciate all the work that goes into this and Lori having to come into the situation and find these things and explain them. And I wouldn't know the questions to ask. So I'm perfectly fine if we get to that point, making a motion to accept the audit report, if you feel comfortable with that.
Well, thank you very much. And what I would encourage Jim, you to do is when we have these accounting issues, and none of it affects cash flows. It really doesn't affect our cash balances. It's just writing off an intangible assets, increasing amortization expense. Just let us know and some sort of discussion about it, because it's the kind of thing when you see a $379,000 loss that is going to raise questions among our neighbors, and we want to be able to say, oh, you know, change in accounting principles, we had to write off this intangible assets, here's what it is. And it's, in that sense, it's no big deal. So with that in mind, do I hear a motion to accept?
I'll move to accept our audit report.
Okay, Mary Helen moves. Do we have a second?
I
Karen, and Dave Anderson seconded. Let's do a roll call vote on that, if we could, please, Wendy.
Mary Helen Kincaid,
I vote aye.
Dave Anderson,
Aye.
Sheila Garcia,
Aye.
Karen Myers. Ask you to unmute, Karen.
Thank you. Can you hear me now?
Yes.
Okay, I vote aye.
And Eric Molander.
Votes aye. So with that, let's move on to the next. Corky, I think that the JCA has got to accept as well.
I think that appeared to be the case on the agenda.
Okay. So
This is Claudio. I'll make a motion to accept the report.
And I will second.
Right, we have a motion and a second to accept the audit report as presented. And is there any discussion on the motion? All right, hearing none. Claudio Campuzano.
Vote aye.
Okay. Karen Myers,
I vote aye.
Corky Collier,
Aye.
Amy Chomowitz,
Vote aye.
and Tanny Stephenson votes aye. That passes. Thank you.
okay, so Lori, it's now back to you with the budget process and forecast.
Thank you. Okay, can you all see my screen?
Yeah.
Just but before we move on, Mr. Chair, I just want to again shout out to Janet and Karen and Katie and Lori and Angel who keep all these things straight among all the different entities. And thanks to James Marta and his team for the audit. It's a tremendous amount of work. And I just want to acknowledge that they do this work in the midst of paying everyone and paying all of our vendors. So thank you, team. Great job. Really appreciate you guys getting us to the clean audits. Thank you.
And if I might say is, I really appreciate Lori coming in. You know, there's been a lot over the years. Everybody's standing on each other's shoulder as far as getting the accounting and the level of staffing, but it was nice that there was a little bit of space for Lori to look at the stuff in the past and look at some consistency and understand those transactions and make those adjustments to have consistent accounting. So I appreciate what Lori has done. It's a lot of detail.
Thank you. All right, let's talk budget from one year to the next. So today we're beginning our budget process for fiscal year 2024-2025. We'll be reviewing some of the timing issues related to the budget process and our plans to address those issues. We'll also be reviewing each district's forecast, which is included in your packet, and we'll be taking a look at the budget calendar. I have left time at the end of the presentation for any questions. I have a hard time seeing hands as I've got the slides up on my screen, but as soon as I am through my 11 slides, I will have time to answer any questions you may have. So with that, I'll jump right in. So the urban district operates under the Oregon local budget law, and under those standards, there's rules around the budget proposal and changes that occur during the budget process. And what that means is, in English, is that I can only issue one version of the budget for the urban district, which gives us a little bit of a dilemma as we look at some timing issues. So as you're aware, we're taking some proposed legislative changes to the short session. And we likely won't know the outcome of that process until the last half of March of 2024. So we're, a month and a half or so away from knowing the results. We've planned for 2 options for the district budgets as well as the urban budget, depending on the outcome of the short session. So option A, which is here on the top, the transition is moving forward as at July 1st. And no budgets will be necessary for the legacy districts as the operations will transfer to the urban district at the beginning of the fiscal year. So if the legislative changes go through, we will be looking at option A, and you likely won't see me come back with the budget for your district because all of that information will be consolidated and go to the urban district. Option B, if there are legislative delays, we'll need to have regular operating budgets for the legacy districts that will be approved by each of you as boards. And in this case, rather than trying to guess how many months the legacy districts would continue to operate, we'll be presenting a 12-month budget for your approval. So one of 2 things will be happening. Okay, so this slide shows our proposed budget calendar for this year, with today's meeting being the start of the process. The proposed budgets under option B are scheduled for presentation on April 23rd. This allows us time we need to move forward once we know the outcome of the short session. We're requesting that the board members provide questions and direction for the budget update by May 7th, so we have time to prepare the updated budgets for your review on May 21st. On June 18th, under option B, we'll request each board to approve their budget. Now we're going to take a look at the current year forecast for each district, and the current year forecasts are critical to the budget process for a couple of reasons. First, if we have anticipated budget overruns or new resources, the forecast allows us to discuss options for resolving those. And second, the forecast is a basis for projecting carry forward fund balances that are a resource or source of funding for the upcoming year. Let's start with the JCA. The JCA is in its final year of operation, and as a result, the board updated the budget in December to allow for spending of all of the funds by the end of the fiscal year. The beginning fund balance is $172,000, which is higher than our original budget. We're forecasting that we'll be spending all available funds in the current year and have planned to continue our temporary communication staff member through the end of the fiscal year in order to do that. And all available funds will be to a zero fund balance at the end of the fiscal year. Now, I will note that under Plan B, the JCA budget would include the pass-through local match funding for the PMLS project in the upcoming year. That funding is that transfer from each legacy district into the JCA and then remitted to the Army Corps in August of 2024. If we're under Plan A, those pass-through dollars and funding of the local match for PMLS will be on the urban district. This is the forecast for the current fiscal year for MCDD. Beginning fund balance is $2.3 million higher than budgeted. This is a result of increased assessments. We've talked about that throughout the year. Savings on open positions. So where we had open positions, in many cases, we did not fill those positions, allowing us savings there. We have savings on non-capital projects and savings on the waterline project. All of those things fed into a higher beginning fund balance than what we anticipated in the budget. Assessment revenue is also projected to be higher than budget by $400,000. This is because when we adopted the budget, we were not anticipating the resolution of the issue of the partially exempt properties. So our assessments are actually anticipated to be higher because we were able to resolve that. Grants are anticipated to be $800,000 less than budget due to timing of capital expenditures being funded by those grants. So those dollars will just be carried forward into the upcoming budget. Personnel expense is forecast to be lower than budget by $700,000, again due to unfilled open positions, including 2 FTEs in legal, 1 FTE in finance, and 1 FTE in public relations. And those positions remain open. Capital outlay is lower than budget due to timing of spending on projects, including the Gate Tower, Columbia Slough Southwest Levee Enhancement, and the Columbia River Levee projects. Both of those have been renamed, but I'm using the names that are in the budget. Ending fund balance is anticipated to be $3.5 million higher than budget. And this is because of the higher resources and the savings in the expenditures that we've talked about. This is the forecast for the current fiscal year for Pen 1. Beginning fund balance is $100,000 higher than budget due to timing of spending projected in the prior year that's scheduled to occur in the current year. So this is just a timing change. Materials and services are projected to align with budget pretty close, a little bit more. And ending fund balance is projected to be higher than budget, but is primarily restricted dollars that can't be used for general operations. So as we know, we have a pretty much balanced budget for Penn 1 with the ongoing support from the city of Portland. This is the forecast for the current fiscal year for Penn 2. Beginning fund balance is $100,000 higher than budget due to lower than anticipated materials and services spending in the prior year. Assessment revenue is projected to be about $50,000 less than budget due to a slight increase in compression in the current fiscal year. We've just identified that issue in December as we started to get reports from the county on those actual compression results. Grant revenues are anticipated to be lower than budget due to changes in timing of the spending on the 13th Avenue Pike project. So those grant dollars will carry forward into the next fiscal year to cover capital expenditures next year. Capital outlay is also projected to be lower than budget due to the timing of that spending as well. And ending fund balance is projected to be higher than budget, again, due to the timing of the spending on the 13th Avenue Pipe project. So part of that spending was anticipated to be funded by grant dollars and part by general fund. And so we've got a little bit of savings, which is going to give us a little bit higher ending fund balance than what we anticipated. And this is the forecast for this current fiscal year for SDIC. Beginning fund balance is forecast to be higher than budget due to lower than anticipated spending for materials and services in the prior year. All other budget line items are anticipated to be in alignment with budget, all pretty close. So the ending fund balance is also anticipated to be a little bit higher than budget, just carrying through from what we experienced in the beginning fund balance. So this slide shows the projected ending fund balances for each district. The green section represents the unrestricted portion of the fund balance for each district that can be used to fund operations. The yellow section of the fund balance is reserved for capital assets, and the blue section is those other restricted funds. The MCDD fund balance is $3.5 million higher than forecast, which provides a strong base for operating cash flow for the district. Also provides us with a strong base that we discussed at the urban district. When we consolidate the districts, that will give us some good operating cash to start the fiscal year for the urban district if things are consolidated. Okay. This slide shows the budgeted and forecast positions for MCD for the current fiscal year. We're projecting cost savings due to open positions that are planned to remain open for the rest of the fiscal year, including those 2 legal FTEs, 1 FTE in public affairs, and 1 FTE in finance. Approximately 62% of our employees are operational, including project managers, the operations team, and engineering. And then this slide summarizes the proposed budget priorities for all of our districts for the upcoming budget year. Meeting our core mission of flood protection and prevention while protecting our employee safety is a priority. Continuing our efforts to stand up the urban district and streamline our operations continues to be a focus. And this last one's a little bit of a change from your original slides. We got some feedback at the urban district that we hadn't given enough credit to our work on nature and environmental efforts. So our final proposed budget priority is integrating nature and equity into flood safety, into that work that we're doing. And at this point, I'm going to stop sharing. If you've got questions about those financial projections, I'm happy to answer those questions at this point.
Okay, Claudio, see your hand up.
Yeah, no, thank you. That was super clear, and I really appreciate all the various discussion and you know, budgets and plans. So it's great to hear how things are tracking in reality. So I know that we moved, or I know, I seem to recall that we moved to an allocation model for sort of the central services that, all the services that the other districts are provided by MCDD. So I was noticing that you've got a number of positions that are vacant in MCDD, but also materials and services for all the other districts were tracking like on or close to budget, and that's the line item where that sort of that charge from MCDD takes place. So I was wondering, is there a true up that happens? I mean, all this said in the context of maybe July 1, we're all one budget anyway, so it doesn't really matter. But if we go to option 2, wanted to understand sort of the how those vacancy savings and any other savings that are sort of otherwise cost allocated flow out to the districts.
Sure. So we do have fixed fees for both the administrative and for the maintenance for the districts. I will say that there are a few new positions that really didn't get factored into those fixed fees, including my own, because the fixed fees were based, if you recall, on historical expenditures that had been charged to the districts. So we've got a 3-year agreement between the districts for fixed fees for administrative and for maintenance services, and we don't have a process for calculating if there is a difference in those fees. So there wouldn't be a way to adjust if there were position savings. We would have lost the ability to have any sort of administrative savings if staff were still tracking their specific hours to each of the districts. So there really isn't a way for us to determine if there is savings that should be allocated out to the districts. So I guess the short answer is no, there's not a way for us to calculate that adjustment.
Thank you.
Mary Helen.
I just have a question, but will we as just Pen 2 ever be able to meet to discuss our budget, ask questions, or is this the only opportunity we have?
We will absolutely have that, and
Okay.
I would hope that like the other districts also give advice and support on the priorities as stated, and give insights into that, because that's going to be an important part of fulfilling our mission. And the second element is that we haven't discussed how much we need to raise in terms of assessments. And I know that Lori has proposed changing the method of assessing people in Pen 2 to one that is unified using the MCDD methodology. But that all needs to get discussed. And if the other board members want to have a meeting of just Pen 2 to go over that, I'd be happy to carve out the time to make certain everybody's comfortable.
Eric, I just
So
want to
we
make
do
sure
have, we do have meeting time set
You're
aside.
crossed off. Jim,
Sorry.
I think that you're first.
Okay, I just want to make sure that that shift to the MCDD methodology likely would only occur if we have a consolidated district.
That's correct. We're not changing assessment methodologies. If we continue down the road to Plan B, which is the legacy districts having their budgets, we haven't gone through any process with the county where we would change assessment methodologies and have no intent to do so. If we consolidate to the urban district, we can only have one assessment allocation method, and the method that the urban district board has been looking at and that has been proposed is the MCDD method.
Okay, so within that, we will be working off of the same split that we had in 60% for riverine, flood control, et cetera, in our assessment methodology. And we would also need to determine how much of an increase that we would need in that assessment in order for us to operate as a district.
That's
So,
correct.
Mary Helen, I think that it probably would make sense for us to have that discussion.
I don't want to make this too terribly personal, but it would certainly help me so that I can explain to our constituents. There were a lot of questions about the refunds, and that is gone. And so I wanted to know when we would be able to answer or ask specific district questions as opposed to these general numbers. And then just a comment about that fourth point on the budget priorities about nature and equity. I might have missed that discussion in the urban flood safety meeting that we had, but I think that those are two very important topics and they shouldn't be lumped together. I mean, it's just my opinion. And I don't know how that came to be that nature and equity kind of got lumped together just sort of as an afterthought in my mind. And so
It
I
wasn't
think
an
if-
afterthought, Mary Helen. It was in response to feedback I received from the urban board at your last meeting. We're happy to continue to adjust that language to
Okay.
reflect the will of the board. It was just an
Okay.
attempt to follow the feedback we received.
Okay, well, and I guess I didn't hear the feedback or I missed it, or, it could all be me. But I just want to make that comment because, Bob Salinger has spoken very
Eloquent.
pointedly about including nature. And I've had opinions about equity because of my work with equity and cultural historical resources. So yes, I would like to have that. And if when those it's like that parking lot, put your questions there. We see the questions, but I don't know that we get a chance to discuss them. And so that's why it's sort of the basis for all my, I learn from everybody that says something, say, aha, because I obviously am not going to know all the questions to ask. And I know questions and points to mention that other people might. So I'd encourage some sort of in this budget process. And I know I'm throwing probably gasoline on a fire, but so that we can have group meetings to hear what other people are saying.
Those are on the calendar. They're on the calendar. And again, if the legislation passes in March, there'll be no need for individual district budgets. So after that, we'll if we need individual district budgets, we'll get those meetings scheduled. Absolutely.
And that's sort of a if, and we don't know it's for certain. And the federal government's already cut FEMA's budget. So all of those things I think are still up in the air. So all of that said, I'll be quiet now, but.
Okay, excellent. If I know that Penn One, Claudio, that you have a position that you need to take a vote on. If there is no other discussion on the budget process and forecast, Lori, anything else that you wanted to go over?
Nope.
Excellent. So Penn One, I think that you have to elect a secretary treasurer.
I just want to say that that concludes the business for MCDD, JCA, and Penn 2. So if those boards would like to adjourn, they may.
All right, MCDD is going to adjourn. Thank you all.
Penn 2, I'm going to stay on as chair of this meeting, but the rest of you enjoy your day.
Thank you for all the help.
Oh, you're welcome.
At this time.
Thanks,
we will
Jayla.
adjourn- we will
Sorry,
adjourn
sorry
JCA.
to interrupt. I've got to go. I've got someone here for me. So Claudio, I vote yes. I vote.
All right. Well, don't worry. We can vote you in without you here.
All right, thanks.
Thank you,
But that's
Jeff.
my vote.
Thank you, Jeff.
All right, bye.
All right. Well, we can handle this pretty quick. So we've got a position of secretary treasurer available in Penn 1. Hopefully we'll only need it for about 6 more months. And my understanding, and Wendy can correct me if I'm wrong, this role is largely one that is now largely filled by staff, but so it's effectively a vice chair stepping in when I may not be able to fulfill the role. So I spoke with Jeff about his interest in taking it. He expressed that he would be good with that. But I'd love to hear a motion from Penn 1 with regard to who we might have, or if anybody has any questions, happy to answer them, or Wendy, if you want to answer them, be great.
I think Jeff would be great. I have no questions and I'm willing to make a motion once all questions are asked.
All right, well, if there are no other questions, do we have a second to the motion?
I'll second.
Great, thank you, Betsy. You got a motion and a second. Vote for Jeff Noodleman as the Secretary Treasurer for Penn One. PJ Christopher.
Aye.
Betsy Emery.
Aye.
Tom Collette.
Aye.
Claudio Campuzano. I vote aye. We did this to Jeff while he wasn't here, but we've got a majority in the quorum, so tough noogies. That's, I think, the end of Penn One business.
Thank you, folks.
Thank you, Penn One. Claudio, did you adjourn Penn One?
We'll go ahead and adjourn Penn One. Thank you, everybody.
Okay. Tanny, now off to you and SDIC, and you also have an officer to elect.
Okay, good afternoon. With Tom Hansel's retirement, which we all wish him the best, and he provided some excellent leadership to the board and all the districts in his time here, and he will be sorely missed. We have two positions to elect today, and one would be for chair of SDIC, and the other one would be for Secretary Treasurer of SDIC, I believe. Is that correct, Wendy?
I'm just realizing I don't exactly remember the terminology in SDIC. If it's perhaps Emily, you remember if it's any different than president and secretary treasurer.
It's director for the little people, I believe.
Yeah.
And I believe it's president for the chair. Is that correct?
Yes.
Okay. So at this time, I'd like to open nominations for, we'll start with president of Sandy Drainage Improvement Company.
Mr. Stephenson,
Mr. Damkin, sir.
I'd like to nominate Tanny Stephenson for the position of president for the SDIC board.
Okay.
I second that.
Okay. We have a motion and a second for Tanny Stephenson. Other nominations for SDIC president? Oh, you guys are cool. Okay. All right. And so, Wendy, would you prefer we just take one vote on these at the end?
And a voice vote is fine as well. So
Okay.
whatever
right.
you prefer.
Okay. And next up would be Secretary Treasurer for Sandy Drainage Improvement Company. And here we go. Chris Damkin.
We need one of you to have to leave early so we can elect you. I don't know how we're going to get through this.
I don't know if it's possible to self-nominate Mr. Stephenson, or I guess Mr. President-elect, but I know it was discussed, and I'm happy to provide that, even though I don't know Ms. Steenblock and Ms. Emery very well. I'm happy to serve in that capacity if either of you wish to nominate.
Staff will have whoever's back who takes it on.
I'd like to nominate Chris Damkin to be our secretary treasurer.
Okay,
I'll second.
there we go. Now it's official. All right, we have a motion and a second for Chris Damkin. Any other nominations for Secretary Treasurer for Sandy Drainage Improvement Company? Hearing none, can we do a voice vote on both positions? That'd be okay. All those in favor of the SDIC officers as outlined today, and that would be January 30th, 2024. Signify by saying aye.
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 Okay. That carries, and
Oh,
that is all.
Any
for us.
opposed?
Oh, any opposed?
Any abstentions? Thank you,
Mhm.
everyone.
All right. With that, that concludes our business today, and thank you all and have a great afternoon.
Tanny and Chris, I owe you a meal of some kind. I'll figure out how to pay you back.
Yes,
Thank you
do.
very much, you guys, for
Thank
being
you.
willing. Really appreciate the help.
You bet.
No worries.
Good afternoon, everyone. Bye.
All right, and so with that, I declare that this format meeting is with no other business. I declare the format meeting adjourned. Wendy, you were about to say something.
Oh, it's fine. I want to just hear, Tanny, did you adjourn the JCA a while ago, right?
Yeah.
Yes.
I did.
Yeah, I missed that. Sorry.
And I think that he adjourned the SDIC, and now we're going to adjourn the format meeting. Thanks very much, and about 30 minutes back in your day. Hope that you enjoy it. Thank you.